How do you ensure stability? Through robust institutions, through checks and balances, enforcing regulation and ensuring fair play. In the last 24 hours, we saw one example of that. The RBI's order on Paytm. The RBI is the Reserve Bank of India. It's the country's central bank. And it has delivered a big blow to Paytm. Paytm is a digital payments giant in India. It controls around 13% of the market share in India. But now its business has been crippled. Starting March, digital payments on Paytm will come to a halt. Customers using Paytm wallets won't be able to top them up. Basically, if you see a Paytm QR code anywhere you are, chances are it won't work, because the RBI has as good as killed it. Now, to be clear, Paytm still has a license to operate in India, but the RBI order has put it under significant constraints. So starting March, Paytm won't be able to process most payments, and that poses a problem because Paytm says it caters to 500 million Indians. 500 million Indians. The company has opened 300 million digital wallets and 30 million bank accounts. That's a lot of people and a lot of accounts. Come March, all these accounts will become useless. And this is a strong move by the Reserve Bank of India. It's a sweeping order. But why was it necessary? The RBI says Paytm has not been playing by the rules. According to the bank statement, Paytm was punished, and I'm quoting, for persistent non-compliances and material supervisory concerns. So the issue is non-compliance, not following the rules. And the RBI order does not get into the details, but Paytm has had frequent run-ins with the Reserve Bank of India, and this scrutiny began way back in 2018. Fundamentally, it centers around the KYC rules. KYC is Know Your Customer. There are rules on how much you should know your customer and what you can do with that knowledge. Let me explain. Imagine there's a party happening in your neighborhood at a really cool club. You want to go there, but there's a bouncer at the door. He won't let you in unless he sees your photo ID. He wants to know who you are, where you live, and check your photo against your face. If it matches, he'll let you go. A bank works just like this bouncer. Before they open your account, they ask for some papers. They're supposed to establish who you are, where you live, and whether you are a real person or not. So when you approach a bank, you're asked to give copies of these papers and to fill a form. This process is called KYC. No bank will open your account or extend any service to you without this. Now, any good guard would also respect your privacy. They won't go around the neighborhood telling everyone that you were at that party. They won't click your photos or photos of your ID and share them with the world. They shouldn't. They should not share any information about you without your consent. And this applies to banks too. They must maintain secrecy. They must protect your personal information. The law mandates it. Paytm got a license from the RBI in 2015, and when an RBI license is given to a bank, it has to comply with the KYC rules. But it appears that Paytm was not complying, or so the RBI believes. Now, reports say that the RBI, the Reserve Bank of India, was concerned about how Paytm shares this information with its associates. Your information, how is it shared? The company could also be under scrutiny over its investors. One of them is Chinese. One of Paytm investors is Chinese. It's a company called Antfin, an affiliate of the Alibaba Group. As of December last year, Antfin held almost 10% stake in Paytm, and increasingly, Chinese companies have come under the scanner in India. Their investments and their activities are all being scrutinized here in India. Could this ban be related to such scrutiny? Could it be linked to the Chinese investment in Paytm? We do not know for sure. But Paytm has its task cut out. After the RBI's orders, their shares crashed today by 20%. The company says it is taking immediate steps to comply with the RBI's directions and to address its concerns, but the crackdown sends a message to all, especially to other digital payment providers. While they bring a payment revolution in India, they cannot play fast and loose with the rules.